Hey folks, welcome back to T2SMC Trader. So in this video, I would love to talk about the whole price action in 5th of August, Monday price action. In this video, I would love to make it smaller video, have a shorter video, but at the same time, I would love to explain all of the London session, New York AM session, and the New York PM session. Every entry opportunity and everything I would love to explain how to look for the bias and when you should look for buy and sell. Everything I would love to explain. So in my chart, you can see this is the mini Nasdaq 15 minute chart. First, I would love to talk about this London session. As I told, around the London session, most of the time, 95% of the time, you will start to look for market is going to make the liquidity. So when market is falling around the London session start from the kill zone is actually 2 to 5, but the session start from 1 to 6, something like that. That is the whole London session. So around 1, around 1, market was falling, right? It was falling until that area. Market keep falling. If you go to on your back, you will see that it's a long time. Okay, so it's gonna be difficult for me to see how far it fall. That's why I'm going to go to daily chart. That will be easier for me to see the fall. So this is the fall. Remember that is the lowest low. When market has fallen over there, look at this low. Okay, so this low and that low. What it has done, relatively equal lows. It has made relatively equal lows. Now I'm going back to 50 minute chart one more time. This is that low. Okay, so around the London session, market came very near to that low. Why I'm using that low? Because there is no other low. That is the only low market reached until that area. When market reached until that area, made that relatively equal lows, what should I look for? For the buy. That is my only expectation because market has made the sell side liquidity. I should look for buy. Now I'm going to 1 minute chart to see that if there was any opportunity to take buy or not. So this is the candle which has made that liquidity around 155 sell side liquidity. After making this sell side liquidity, first market went little higher. So I have to keep that chart open as well. It went little higher, fall. It was just consolidating, right? It has taken this liquidity, this relatively equal lows. These lows it has taken, then it has a market structure shift over here. Fair value gap, it has stayed that fair value gap, market went higher. Now, here the problem is I wasn't convinced by that setup. The reason is the way it has left that liquidity. Look at this relatively all of this liquidity, okay? So all of these lows, around that lows. So that was relatively equal lows. I would love to see that market would take that relatively equal lows. Then it will give me the market structure shift. But market didn't take that relatively equal lows at the same time. Here, what do I have? This week 50%. Why that is important? Because it has taken all the liquidity. If you go on your left from the 50-minute chart, you will see that it has traded the 50-minute fair value gap. Okay, just go to your 50-minute chart and you'll see that there is a fair value gap from 50-minute chart which is traded. So this week 50% is important for me. So my higher time frame, I have the higher time frame. So I have the higher time frame level over here. Let me mark that cosment of that week. As I told, the week 50% should work as a last fair value gap. Okay? So this is that 50% of that specific week. Now though market respect that weak 50%, it didn't reach over here. That is more obvious that market should go higher. I'm talking about London session. Don't worry, when I'll be in AM session, I will talk about whole price action. Just let me clear first about the London session. So when it left that relatively equal lows, I would wait for to see that market can take that relatively equal lows or not. But as you can see, market came until that area, made this relatively equal lows more stronger. So what is that? That is the strongest liquidity from 1 minute chart. So I would love to mark that strongest liquidity around that area as my sell side liquidity. Okay. So it left over there, then there was a very nice displacement. There was an entry fair value gap, breakaway gap. You can see a very nice entry fair value gap. Let me mark the entry fair value gap here. This is the entry fair value gap, and over here you have the breakout gap. What you should expect that market is not going to close below the constant cosment of that breakaway gap. What is your market structure shift? If you'd love to mark this swing high for shifting your market structure, is it going to be valid? In my opinion, this is not going to be valid. If you look over here to that specific run, it has taken this relatively equal lows over here, then shifted over there. Now, this swing high is valid to shift market structure. So in my opinion, this was the real market structure shift over there. I will tell you that why I wasn't looking for that buy. Okay, and there was your entry fair value gap or whatever fair value gap you talk, that was your real fair value gap. So if I wanted to take buy, I should have taken buy from that fair value gap and I should cover the breakaway gap. So let me mark the breakaway gap as well. Over here I had this breakaway gap. So below the entry fair value gap I had that breakaway gap. That should be my entry point. I would cover that breakaway gap and maybe I would go for some kind of relatively equal highs. You can see this is relatively equal highs from one minute chart, or maybe this last fair value gap, whatever you would love to mark. You can go for that. The problem, I told that though this low has taken this relatively equal lows, look, there was another relatively equal lows, but it left that extreme relatively equal lows. If you don't want to mark that low, then instead this low, this is also the obvious liquidity, which market should be taken before expanding higher. Though I was looking for that buy and market left that sell side liquidity around that area, still it should take some kind of 1 minute liquidity. That market didn't take that one, so I wouldn't go for that. But if you can think that okay, market didn't take that on, what does I mean, that doesn't matter. Still it has taken this relatively equal lows around that area, or obvious liquidity, it has taken that relatively equal lows. Then that was your market structure shift, fair value gap, immediate reaction, breakaway gap, market went higher. At the same time, if you don't want to mark that on, instead you would love to mark this market structure shift until that area, and then you want to use this one, that one as your entry, whatever you would love to mark, you can mark. But in my opinion, in London session, I didn't have any opportunity to take buy, at least not even by the A++ setup. So the whole London session, though it worked perfectly after making the liquidity with the high time frame point of interest, it went higher, everything was perfect, but the setup was not cool to me. Okay, it's not high probable and I wouldn't go for that setup. So that was my London session explanation, and later market actually took some liquidity around that area. You see this low has been taken over there around 250 or something, then it went higher, it expanded higher again. I mean, dramatically it expand higher. There was market structure shift over there, but this all market structure shift, if you would love to force the market to shift it from here, this swing high, which is actually valid for shifting market structure, so let market, and it has taken this sell side liquidity around that area. It is another setup as well. It has taken this sell side liquidity, market structure shift. There is your entry fair value gap, or let me mark the entry fair value gap. This is your entry fair value gap. Where is your breakaway gap? You have the breakaway gap over here around that area. This is your breakaway gap. There was another entry opportunity from the London session around 3 a.m. New York local time. Still, I wouldn't go for that trade as well. The reason is there was no higher time frame. So over here, I had the 50% of that specific week, remember? But here, I really don't have any higher time frame point of interest, so I wouldn't go for that buy, as market left that sell side liquidity around that area, strongest liquidity. I wouldn't I wouldn't go for that buy. Also, I wouldn't look for sell. The reason is market has already made the sell side liquidity, so it should keep going higher, it should not fall. So either way, I wouldn't be able to take entry. But if you would love to force, then you had an entry opportunity over here, here, also here. So it's up to you. Do you want to take those entries or not? It's just up to you. Okay. Then I would love to talk about the New York AM session. Okay. So New York AM session, just to focus on the last video I have uploaded about New York. About ICT's 24 mentorship. I really don't want to remind you those. Instead, I would love to explain the price action from my concept. Okay. Sorry, not my concept, from my perspective. Now, today is Monday. So Monday, you should expect that market is going to be consolidated. So it should be done something like this. That should be your first thinking, because of your weekly point of, PO3, weekly PO3. you should mark the Friday low. Now you can see this is the Friday low over there. That is the Friday. Market should stay inside the Friday range. When market is outside of the Friday range and it is falling, we had a news around 10 a.m. which is PMI. So you should expect highly volatile consolidation, accumulation. Look at this accumulation. So market went lower, higher, lower, higher, lower. See this accumulation? Yeah, it is highly volatile accumulation, but still it is accumulation. So when market is very far from Friday low, you should simply think that market is going back into the Friday range now. You should not keep thinking that, okay, market went little higher, now it is going to take this relatively equal or sell side liquid. No, you should not think like that way. As per narrative, market should keep going inside the Friday range. Now you can say, brother, market didn't reach inside the Friday range. You don't need to predict the close. You should just think where market is heading. Okay, where is market trading for? That's why when market fall too far from Friday low, simply you should think that market now should reverse into the Friday range, as it is the accumulation phase. Also, this is the starting of the run, so market should go toward the starting point. This is the morning session around 9:30. This is the 9:30. Okay, so around 9:30, what do you see from your higher time frame? First, you need the higher time frame. So market come back again around that area, trade that 50% of that specific week, failed to take that low. So this week 50 low, market failed to take that low. If market has taken that low, this low, then this constant encroachment or the 50% of that week is not important anymore. It's not important anymore. But until this low is not taken and you see that market didn't close below the constant encroachment of that week, it is important. It is going to work as a last fair value gap, your higher time frame point of interest. So you can simply think that market can reverse because of your narrative, because of your highly volatile consolidation. It should reverse into the Friday range. You need the higher time frame. You have the higher time frame over here. So market has traded that area, this area. Then market went higher. Where is your last down close body close candle? This is your last down close body close candle from your 15-minute chart. Now, why that is your order block? Because this order block has traded that fair value gap. Where is my fair value gap? The weak 50%. What is that? The last fair value gap. Remember, this is the weak 50% is the last fair value gap. Am I going to tell this for the first time? Just watch my live. How many times I explained that weak 50%. When you are expecting bias, bullish, you should expect that market is not going to reach until that constant encroachment. That should be your first expectation. Even if it reaches until that constant encroachment, you should think that nobody is going to close below that constant encroachment. If it closes below this constant encroachment, that can be a fake breakout. But if it is confirmed like 2 to 3 candles has closed below this constant encroachment, then it's not valid anymore. Or if market can go below that low, that constant, that weak low, it is also not valid. Either way, you can see how beautifully it worked as a last fair value gap. When it has traded the last fair value gap, where is your last down close body close candle? This is your last down close body close candle, which is going to work as a order block. Brother, this is the time to go little further of the price action. Okay, so I'm gonna go a little deeper. You have to learn it one by one. Okay, you have to learn. This is the mean threshold. Now market didn't reach until that mean threshold. That's why I'm not going to use that mean threshold. I'm not gonna mark it to that mean threshold of that order block. So I would love to keep that order block level only. You have the higher time frame. Also, you have this constant encroachment as well. If you have a bullish fair value gap around that area, that is more beautiful. Okay, that is more beautiful. Either way, your expectation market is going higher. Why it is going higher? The reason is market is going higher just to go inside that Friday range. Now you just can't think that about the narrative. You need the liquidity from 15-minute chart. This high, that high, they're relatively equal highs. That is your buy side liquidity. This relatively equal highs is going to be your buy side liquidity. So not only the narrative, not only the Friday range, not only this weekly gap, you have also the what do you have? Buy side liquidity. When you have this order block, that order block, what time, what is the exact time market came to this area, that order block area? It has traded here as well, and then come back again here. It has taken this low, which is also the liquidity. Also, this all of this relatively equal lows. So let me mark all of this relatively equal lows around that area. Market has taken all of this relatively equal lows. At the same time, it has traded the breaker block here. Now, if you didn't watch my last video, which is actually the first video of ICT's 2024 mentorship, you can see on the right top corner here, you will get the link of that video. You please watch that video, where over there I have explained the breaker block. I have marked everything over there, the breaker block actually. So it has traded the breaker block, taken this relatively equal lows, which is gonna be the sell side liquidity taken. After taking this liquidity, market went higher, give you the market structure shift. Here is a problem. What is that problem? This high and that high, they are also relatively equal highs. If you take a closer look, this high is actually independent, okay, which is also valid for shifting market structure. Why? Because it has a swing high on its left, which is lower than that. It has a swing high on its right here, which is lower than that. So this is a valid swing high for shifting market structure. This is a valid high again for shifting market structure. After taking all of this liquidity, traded that breaker block, shifting market structure, fair value gap. Here is your fair value gap. You have the fair value gap around that area. Immediate reaction. This is your liquidity. You don't need to hold it until the extreme liquidity. Instead, you can just maybe you will be able to take a partial around somewhere, around anywhere. If you would love to, just let me put it maybe here. I don't know where you are going to put your stop loss. And until that area, you can see it's near about 179 handle. I'm not interested to hold my trade for 179 handle just by 1, 2, 3, 4, 5, just 5 minutes. It takes 5 minutes to reach over here. There is also a problem to take that entry. The problem is we are very near to 10 a.m. where we have news. What news? We had the PMI. So we had a red folder news. So I don't recommend it to take this entry. If you'd love to force it, if you are overzealous, obviously that was the outline of the trade. I just wanted to outline the trade because I wasn't here. You know, Bangladesh got the freedom today. So I was celebrating our freedom actually. I wasn't here, but I'm just outlining all the possible setup over here. So market has already traded, that was the setup. After taking this buy side liquidity, am I going to think that market is going to fall? No. Why? Because now I have this weekly new week opening gap. That is the real liquidity point. That means I would love to simply think that market is actually reaching for that liquidity point. So this is that 10 a.m. news. So around 10 a.m. the PMI news. Then market fall. I will start to look for another setup. Now, when I'm looking for another setup, obviously I need a higher time frame again. Okay, I just need a higher time frame. What higher time frame do I have over here around that area? Now, if you look over here in this specific area or 15-minute chart, you have this bullish fair value gap now. Okay, previously you had the order block, now you have the bullish fair value gap. After that big fall, okay, the market retraced, come back again, failed to take that low, trade that cosmet, market started to go higher. It left that bullish fair value gap. What should you think? What should you wait for after a big fall? Obviously, you should look for a bullish fair value gap. Why didn't you wait for a bullish fair value gap over there, brother? Because I had this last, cosmet. At the same time, we are not going to take that entry. Why? Because we had a news around 10. I just outlined the trade with the concept. That means when you will be able to read the price action, to think about the price action, you will be able to take that entry as well. There is nothing wrong to take that entry. But in time, when you will be experienced to read the price action, then and only then you will be able to take those type of entries. Otherwise, you should wait for this type of bullish fair value gap. So over here, I have this bullish fair value gap around that area. So what should I simply wait for? I should simply wait for the market reach until this bullish fair value gap. Now look what happened over there. Market has taken these relatively equal lows from 1 minute chart after after the 10 a.m. news. So until this time frame, we are not allowed to take any entry. Then market made relatively equal lows. Market has taken that relatively equal lows. Then market went higher and gave me the market structure sheet over here. Now you have the market structure sheet over here. When you got that market structure sheet around that area, you had this fair value gap over here around that area. This is your fair value gap. Maybe you took that entry. Maybe, okay, I'm just telling you, maybe you took that entry. Where should be your stop loss? At least below that candle which has made this fair value gap. So if you see this candle has made this fair value gap, how many handle it's going to be? 48 handle. Are you going to take that entry? I'm going to filter my trade by depending on that stop loss. No, I'm not going to be able to take that entry. If it was near about 15 handle, then I could take that entry. Either way, it was not a perfect setup because I got stopped out in later, you can see. But I would force the market, I would go for that trade to put my stop loss below that candle. This has made that fair value gap because I know if I get stopped out, I'll be able to take re-entry when market will close above that fair value or something like that. It's a different matter. I don't want to talk about that one. But when it is 48 handle, if you'd love to put in a logical level, so which is going to be below the swing low, that area, it's gonna be 15 handle stop loss. Are you going to take that entry? No, brother, I am not going to do that. So what I'm going to do, I'm going to take the entry here and I'm going to put my stop loss there. Did you know that market is going to stop open here? How did you know that? I didn't know that. Brother, it is the order block. No, it's not the order block. This is not the order block. But it has traded the 50% of that order block. So maybe the mean threshold of that order block. Look how it traded that mean threshold. No, brother, it didn't trade that mean threshold of that order block. This is not the order block. Again, this is not the order block. Why market reached until that area? That is a deep discussion. I have to go to second chart where I will prove you that it has traded the 15-second or the 30-second or the 5-second last fair value gap over them. That's why market reached until that area. But it didn't trade that order block because that is not the order block. The order block is over here. That is your order block. That is your consecutive order block over here. So market has traded that consecutive order block. Market went higher. Whatever. That is a deep discussion. I don't want to go over that. So that was your second entry opportunity, which I was unable to take. The reason was the extreme, the huge stop loss. I would love to frame my trade. So far, I didn't see any trade for the London session, not only for the London session, not only for the AM session. You can force the market, there is nothing wrong, but in my opinion, there was no setup. Then market went higher and finally market reached until that area. This is the lunch hour. So this is the lunch hour. I would love to explain price action over here. So it reached until that area. Okay. Now, if you see over here around that area, this is a very messy price action from 15-minute chart. So I would love to go to hourly chart. So here is my hourly chart. I would love to see this is the last fair value gap. This is my entry fair value gap. I would love to mark the entry fair value gap from my hourly chart. Okay. So I would love to mark that entry fair value gap from hourly chart. Here, this is the entry fair value gap from hourly chart. I'm going back to 15-minute chart one more time. And you can see market has traded that entry fair value gap from hourly chart, then market fall. Okay. Then it has fallen. When it has fallen, are you going to take sell? Do you have sell side liquidity? No. Do you have the intention to think that market is going to take that sell side liquidity? No. Why? Because of your narrative. You know market is reaching for the Friday range. So you should only look for buy. No sell is valid. But brother, after trading that 80 fair value gap, market has made some kind of bearish fair value gap from 50 minutes. So after a big run, finally I have got a bearish fair value gap from 15 minutes over there. So this is your bearish fair, though it's a very small. As market reached until that fair value gap, so I'm going to mark it over there. There was another fair value gap as well. You can see. So finally, market has made a bearish fair value gap to that specific area. Okay. After making that bearish fair value gap, as you can see, market has traded that bearish fair value gap. After trading that bearish fair value gap, then here, okay, market has taken the liquidity. This relatively equal highs market has taken, failed to take that extreme high. There was a what to say? I mean, some kind of first fair value gap entry over here. I'm not interested to talk about this first fair value gap entry. Instead, I would love to show you the setup from 22 white model. So as you can see, this is a very messy price action. Okay, though it was inside the session, there was no market structure shift in my opinion. Even if there was a market structure shift, if you would love to force, then this is going to be only fair value gap which has been traded over here even before shifting the market. So either way, I don't see any sell setup over there. You can say, brother, there was a sell setup. No, this swing low is not valid for shifting market structure. I'm not seeing this swing low as a valid shifting market structure, and this fair value gap as my entry, though it has traded that bearish fair value gap. At the same time, I'm not looking for sell at all. I'm not looking for sell at all. The reason is, first, I don't have the sell side liquidity. Second, my narrative is bullish until market reach inside the Friday range. Okay, so you can see finally market dramatically fall until this area, market fallen dramatically, and then it has traded this wardrobe block. Why that is the wardrobe block, brother? Because this is the what is a middle candle of that specific run. This is the middle down close candle. Remember, I talked about this water block in my live lot of time. Okay, in my live lot of time, I talked about this middle down close body close candle. Yeah, I would love to see that if it could reach until this bearish fair value, that would be better for me to look for buy. But as market reach until this water block, there is nothing wrong. I mean, I just can't say that it is wrong. So after reaching to that specific area, I would love to look for the buy again. Here, this swing high, which is valid for shifting market structure. I got another market structure shift over here. Okay, market has taken this relatively equal lows around that area. I have the higher time frame bullish order block around that area. Market has taken the liquidity, market structure shift. Where is your fair value gap? This is your entry fair value gap. So over here, this is your entry fair value gap. Where is your breakaway gap? There is your breakaway gap. Let me mark the breakaway gap. Okay. So here, this is going to be your breakaway gap. What should you expect? That market is not going to close below the 50% of that breakaway gap. Now, as you can see, market reached until that area, then it went higher, come back again to this breakaway gap. Then market finally it expand higher after 345, where we are not able to take any kind of entry. After 345, no entry is valid. Now, maybe you would love to take entry from that entry fair value gap. Let me take that entry. Where should be your stop loss? At least below that breakaway gap. So how many handle it's going to be? 45 handle. What else can I do, brother? I really would love to take that entry right now because I want to take that entry. If you are overzealous, then either you have to sacrifice the trade or you have to take the entry from the breakaway gap. This is the only way in this type of volatile area where you are allowed to take your entry from that breakaway gap and cover the breakaway gap, the candle which has made this breakaway gap. So this candle which has made this breakaway gap. So you just cover that breakaway gap low as your entry value. Okay. So here you are going to sacrifice. If market doesn't reach over here, you will just sacrifice the trade and you will just let him go. If you think that I am mentally prepared to sacrifice that trade in that type of situation, you will wait until the breakaway gap and you will cover that candle which has made that breakaway gap. So in this type of situation, you can see it's near about 17 handle, and for that, how far you can look for, I guess maybe until this area, that swing high, or maybe until the last fair value gap. Where is your last fair value gap? So this is your last fair value gap or the entry fair value gap. This is the entry fair value gap. Sorry, this is the last fair value gap from 1 minute chart. Here, this is your last fair value gap from 1 minute chart, and this is the entry fair value gap from your 1 minute chart. Okay, so what you can do, you can actually hold your trade until this last fair value gap, but at the same time maybe you will take a partial above that high or maybe until this entry fair value gap. Either way, you don't need to hold your trade for so long. It's my opinion. Just for me, 25 to 40 handle is more than enough. So this is the whole price action, and finally market tap to this area one more time and then boom. Okay, but we are unable to take that run because it is after 345. If you just get overzealous and you take this entry, I believe that in a longer term you are going to be a loser. So you are not going to be a winner. So this is all about the price action from Monday. I am sorry because I have explained all of this price action. If it is a little longer video, I'm extremely sorry for that. This is all the price action. If you ask me what I would do today, I don't see any trade for me for Monday. Okay, no entry for me. No entry is valid for me. That is my true opinion. Just my honest opinion. Okay, that's all. So guys, thank you for watching this video. If you think it's a little insightful for you, don't forget to give me the thumbs up and don't forget to subscribe to my channel. Okay, so until the next video, cheers.